Welcome to your Profitable Law Firm podcast. I'm Kelley Brubaker, your dedicated host, passionate about empowering law firm owners. Let's dive into the hidden strategies that lead to overflowing profits, scaled growth, and thriving lives. And this is where overwhelm transforms into confidence, enabling you to create and enjoy your dream firm and your dream life. Welcome back to the podcast. And it's been an exciting last couple of episodes. We've had some amazing guests, and I promise that this next guest is not going to disappoint. You're going to be really excited. So join me. We're going to welcome my very dear friend, Robin. Robin, if you can introduce yourself.
Hi, I'm Robin Rae Huntley. I am an enrolled agent, certified tax planning coach, and the president to the Florida Society of Enrolled Agents.
Awesome. So I am excited to have Robin on the podcast today because Robin is a very dear friend of mine. We were both active in the Profit First community back in 2020. And her and I got matched into a small, I think we called it accountability group. And there were a couple of others, right? And so I think there were 4 or 5 of us in total that started the group. And so we've just been buddies ever since. And, Robin's been a great inspiration to me, and neither of us are active in the Profit First world anymore, but it's still a bond that we share. And we're still, still friends with a lot of the Profit First people that we have met through our years. Cause we were both I was in Profit First for 4 years, and I think you were there for 3, right?
Yeah, 3.5.
Yeah. So, so that's how we met, and we've had some amazing journeys together. We've done a couple of different conferences, so fun times. But professionally, Robin's amazing, and I love what she does with her clients. Now, so if you paid attention, she's an enrolled agent, and so she focuses on taxes. And something that I really love with what Robin does is she has something that she calls tax maintenance plan. And we're going to talk more about that. But let's talk more just about, it's February. Well, really today is what, January 27th of 25. So today's the
Right.
official kick-on, right, of tax season. And since taxes are kind of fresh in everybody's minds, or a lot of people's minds at this point, I just want to go through and talk about when you hire a tax professional, what does the typical relationship look like? And then, let's go into, how, you're providing additional value to your clients. So what, typical tax preparer, somebody calls, and what does that look like?
Well, my clients, they don't just come to me in April and ask for a history lesson. Because if you're just coming in April and you want me to prepare your taxes, you're asking me to tell you what you did in the previous year. So I see my clients throughout the year. And if I'm just doing tax preparation in April, that's it. That's all you're hiring me for is just tax preparation.
Yeah, I mean, I get frustrated. So, although I'm a CPA and I've done tax work over the years, that's really not my favorite thing to do. And I like, I don't lie about that, but I get frustrated. Like, I know, I know, but I get frustrated because I'll talk to somebody and not even necessarily a business owner, just either friends of friends, family, or business owners, through a business group or whatever, or prospective clients. And a really common complaint is, I owed too much in tax this year, or I got this huge refund, which I know a lot of people are like, I'd never complain about that. But some people realize that if they overpaid, that's why they overpaid that year,
Exactly.
which is why they got a refund. But it's just very hard for me that I sit back and see so many people complaining about taxes, and yet they don't value enough to like sit down and pay more than just the tax prep. Like, a lot of people, I don't think, understand that when you hire your person to do your tax return, that's what you're hiring them to just do your tax return. And like you said, it's history. It's a history lesson. So just like I've said on the podcast before, you have your bookkeeper who is just, they're a historian. They're recording the financial transactions of your books. And that's needed. It's absolutely needed. You need a bookkeeper. You need somebody to record that transaction, right? And then you need the tax preparer because we need to gather the information for your business or your personal stuff and put it into the tax forms to send it to the government to figure out how much tax you owe for the year. But it's like there's this shift that needs to happen that just isn't quite making it. Like, I just feel like too many people aren't making the shift into the forward looking. Like, what can I do? So that's why I love, we were talking about your tax maintenance program, and I love how that shifts. And it's like, okay, yeah, I'm going to do your tax return because that's the compliance part of tax work. But your focus isn't just to get the return done. It's that planning. So what are the types of conversations that you have with clients throughout the whole year?
Well, first of all, when I meet with a client, they give me all their information and then I form a tax plan. So
Right.
that's separate from my tax maintenance. And
Okay.
then throughout the year, we're implementing that tax plan throughout the year. And we still talk about the different strategies. What is your long-term gain or your long-term what do you want? What's your exit strategy? What do you want in 5 years? What do you want in 3 years? What do you want in a year, 6 months? And we talk about those things and we go over the numbers. And I'll say, well, you did really well over this past quarter. So maybe we should increase your estimated payment. Or you want to know what? You didn't do that great. Let's not make that estimated payment. Let's decrease it a little bit.
And that's
Or
a big one. Absolutely.
absolutely. And I have one client who does not like making estimated payments at all.
Just
So
one.
I have one favorite. And so I adjust his withholding on his payroll. So his withholding is adjusted every month. So that covers at the end of the year and he doesn't have to make any estimated payments because he pays throughout the year. The So, when you see me throughout the year and you're in my tax maintenance program, it is everything that I do throughout the year. The tax return is just a reconciliation of what we've done all year. And it's not really a history lesson because you already know because you spoke with me all year,
Yeah.
right? It's like I hear all the time, I can't get a hold of my accountant. My accountant never returns my call. Okay, well, um, do do you pay for them to
Right.
return your call? Or are you just constantly calling, asking questions, and all you do is a tax return? Or
Right.
my accountant didn't give me the right estimated payments, and that's why I owe all this money. Okay, that I can't agree with because did you speak to your accountant throughout the year? Does he look at your
Right.
numbers to adjust your estimated payments at the end of the
Right.
so at the end of the year, you're not making this big payment? So there a lot of people have a misconception of the fact, well, I paid him to do my return, so he should do everything else. No, you paid to have the tax return prepared. Great.
Absolutely. Yeah. And I mean, you start thinking, so, like I said, we're in January 2025, and this is to file your 2024 taxes. At this point, there's only like two things I can think of that are even possible that you can do now in 2025 that's going to impact your positively your 2024 return. Um, and it comes down to, basic, it revolves around putting money into retirement accounts. You have up until you file the return that you can get some benefit. But look, to be honest, you're choosing, you're going to put money into a retirement account to avoid paying a larger tax bill. So you still now need to find the balance of, if you've got $50,000, how much of the money do you put into the retirement account to lower the tax bill? Cause it's not dollar for dollar. So, but when you start thinking about your 24 taxes in 2025, it's way too late. Like, it just
Absolutely.
too, like, you just can't do anything. That's where That's why I love what you're doing working with clients throughout the whole year so that you're having those conversations. And I laugh like the quarterly estimated payments. I mean, I don't know how many times I've talked to people who, they're like, "Oh, I just make whatever, the same payment I made last year." And I'm like, "But your income's different this year." Like, so, like, or good or bad. So I don't want you to overpay your quarterly estimates. I don't want you to underpay your quarterly estimates. But you've got to be in touch with your person all year and you've got to pay for that. Like you've got to value the
Absolutely.
time because it takes you time. It's not like you look at, we were joking before we started the podcast and we were talking about the quick questions. Hey, I just had that quick question. There's no such thing. Like whatever professional service you're in, there's never a quick question. I mean, doctor, lawyer, prepare tax preparer, whatever. It doesn't matter. There's no quick questions. And there's never a simple yes, no answer, right? It's always there's follow-up questions and then there's contingents. It's a whole little, decision tree. So, so I laugh about the quick questions, but
But
it
my
is
favorite
so
answer
worth.
is it depends.
It depends, and that's the thing. It depends. I don't know. It depends, but so it's just so worth investing the money and the time because there is time because so if somebody sends you their current profit and loss statement, it's not like you just look at it and automatically spit out an answer 30 seconds later. There's thought that goes behind it. There's calculations that get updated. I mean, yes, we have tax software available that makes some of the calculations easier to do, but you still need to take the time. So it's not like, it's not something 30 seconds and you have an answer. You really take time. And that's where I like that you're meeting with people throughout the year to be able to get updated information as it's happening. But of course, this all is, your conversations all hinge on current bookkeeping. Like you've got to have your books accurately done. I mean, I've been
Absolutely.
talking to somebody the last couple of months, I've been talking to somebody who couldn't understand why their net income looked so awesome and their cash account is like next to nothing. And I kept asking, it started off as one of those quick questions. Why does my net income, why is it so high and I have no money in the bank? And I'm like, well, that's not really a quick question. I have a couple of ideas off the top of my head. And they were like, nope, that can't be it. That can't be it. That can't be it. And then I said something and they were like, "Oh, that actually might be it." Well, it turns out that the person they had doing their books was booking an entry backwards and double booking income. And so they had like 300, no, 600,000. We're to the point now where it's $600,000. $600,000 of extra income.
Wow.
And yeah, it's a big deal, but it hinges on their book. So, from the business owner standpoint, they were like, but our books
That's
get
99%.
exactly, yeah. Oh, it's a big deal. It's a big ball of wax that we're untangling. But and of course and unfortunately it's for 2023, which the returns are already filed. So now we have to file amended returns to fix it. It's definitely a sticky wicket, but we're piece by piece, we're getting it all figured out. But so in the business owner's defense, he's like, but I have somebody doing the books. And I'm like, yeah, but they're not reconciling your bank accounts. That's the problem. And they were randomly trying to do reconciliation. So, but not currently. So like they were still stuck on the beginning of the year. And I said, yeah, if you would have gone in and looked, you would have noticed the accounts. If you looked at the account reconciliations, they weren't current. And the ones that had been done, there were a ton of unreconciled items, meaning transactions were in the books that never posted to the bank. And deposits, I'm not sure I've ever seen a deposit hang as an unreconciled item for more than like a week, maybe 10 days. Like
Not even.
deposits, exactly. Like normally it's the same, like you take it in and it's on the statement the same day or the next day, but maybe if it's a check, like an out of state check or something, maybe the bank held it for a week. I don't know, but deposits should hardly ever be a reconciling item. If they are, there's a problem, in my opinion, just from my
Absolutely.
experience, I should say. So just personal experience, what I've, professional experience, what I've encountered. Um, so as I, but the business owner's looking at me like, how would I know? And I'm like, you're right. Like you have somebody that you're paying to do the books, and they're doing the books, but they're not understanding some of the stuff they're doing. So it all works, hand in hand. And that's something that I've talked about before here in the podcast is, really you need a team. And there's advantages to it. I talk to a lot of people who are like, I just want the one-stop shop. I want to be able to go to one accounting firm. They're going to do my taxes, they're going to do my payroll, they're going to do my bookkeeping. And it's funny because I didn't even prompt Robin about this. And we were talking before we started recording, and we're both on the same page with this is, yeah, there's pros to that, to being able to say that you have one place that's going to handle everything, because in theory, the different people, if it's a larger office, theoretically, everybody on the team knows what's going on. Um, from personal experience working in an office, that doesn't always happen. Whoever's over here doesn't always talk to who's over here. And it's sad, and it's not intentional by any means at all. I don't think it is. It's just natural course of work, right? But the advantage, I mean, talk, Robin, about the advantage of having somebody else come in, even if you just have, so if you have a bookkeeper and you have your tax person, or if you have a bookkeeper and a CFO, or, a tax strategist that's different from your tax preparer, there's advantages to be had there, right?
Oh, absolutely. Checks and balances. So I don't do bookkeeping, and
Yep.
they have someone else do the books. And there was an instant checks and balances. I'm looking over all their stuff, and I'm looking at their 941s, but I'm not seeing the payments going to the IRS. And I'm like,
So
because
sad.
they're sending me the IRS letters. And I'm like,
Yeah.
where's this money going to? Well, that bookkeeper was putting it in her bank account.
Yeah.
So the checks and balances are there when I'm looking at these expenses in your profit and loss. I'm going and I'm drilling down and looking at them, because are they legitimate expenses for that business? So
Oh
that's
yeah.
what it all is. And when you have someone that looks throughout the year at your books, there's the checks and balances for the bookkeeper. I'm not saying there's a bunch of shady bookkeepers out there. Don't get me
Yeah.
wrong.
Agreed.
There's
Agreed. Yeah.
shady tax preparers as
Yep.
well, you know? So
Absolutely.
you have to have checks and balances to make sure that you are being protected and protected of
Yeah.
yourself.
Absolutely. I agree. And I mean, I started my career in Big Four, and I was an auditor, and that was just a big thing, the whole checks and balances. Just, of course, I was going in as Big Brother because I did financial statement audit, but a lot of people, they hear the word audit and they freak out. And really, it is that check. It's because somebody completely independent of the situation can come in and say, yep, we looked at it. Now, an audit doesn't guarantee things are perfect 100%, but we randomly checked a variety of things and they held up or they didn't. And, so you issue an opinion either way, good opinion, bad opinion, but just being able to have somebody else. And I know a lot of business owners I talk to, they tell me, well, I don't want to have multiple people that just cost more money. And then, well, not really. It's going to cost you more in the long run if something nefarious is going on. I mean,
Right.
and I'm with you. I don't think there's times where, in the situation that I'm talking about, it definitely not wrongdoing on purpose. Complete mistake. The person doesn't understand what they're doing. And it's really nobody's fault. It was one of those, somebody got put into a position that they weren't specifically, that wasn't their background. They were trying to be a team player and help out, not understanding what they're doing. And then there's reliance on that information, and it's not correct. So then decisions are made on bad information. So it's just a bad situation all around that nobody intentionally created. It just happened, that it just rolled out. It just happened that way. Now what you were talking about, that was on purpose. So it's whoops.
That was intentional. That was very it was, it was a client that we had, and
Yeah.
I was like, something doesn't sound right. So I'm not going to send an email to a client and tell them something doesn't sound like. I'll pick up the phone.
Yeah.
Unlike other accountants that I know,
Yeah.
hi, do you got a minute? Did I catch you at a bad time? We need to have a conversation.
Absolutely. Yep.
And, and that's another thing. I get people that, "Oh, I can never get through to my accountant." Well, again, are you paying for the service to get through? Because my clients can get through to me in my tax
Yeah.
maintenance program, but other ones can't. You have to schedule an appointment. You have to pay for it. I pay
Yeah,
for my
absolutely.
education. So
Yep.
you are calling me because you want my knowledge.
Yeah. Absolutely. And it's your knowledge and your experience. I mean, I there was a post on LinkedIn, I don't know if it was yesterday or today, and it kind of ruffled my feathers a little bit because it's a college professor upset that in Ohio, and I'm in Ohio, the CPA requirements for like the last 25 years, oh, maybe even 30 years. Yeah, I think now we're at 30 years. You've had to have 150 hours of college credit to be able to be eligible to sit for the CPA exam. And Ohio just changed it back to the original 120 hours, which get your bachelor degree and now you're eligible. And so this college professor who I'm not even connected with, I don't follow, but somehow showed up in my LinkedIn feed, and he, puts this whole little, essay about how he's suspicious that Ohio's doing the wrong thing and this is hurting the industry. And I'm sitting there like, first off, dude, what, like, do you really think like I luckily I squeaked into the 120 hour before it changed the 150-hour requirement. And I'm sitting there thinking, this is the difference between college and the real world. I've learned so much more. It was actually easier for me to take the test after I had worked for a year because I had all that working experience. I can only learn so much from a book or from you telling me things, but getting out into the world and seeing things. So, I mean, you've been a tax preparer for a long time. So you get that experience. So when somebody calls you, it's not that you just read the tax code or you read something in an article or in a book or the tax instructions, right? I mean, it's all that experience that's coming through. I mean, it's well worth investing to be able to sit and talk to you about this stuff. So
Last year was 40 years since I prepared my first return.
I wasn't gonna say I was gonna be nice and not say the year, because as soon as I was like, "Yeah, I squeaked in under that 30," and I'm doing the math in my head, and I'm like, "Oh my god, I did. I graduated college 30 years ago." And then I worked 2 years. I started my accounting career 2 years before that because I started my in '93, and yeah, 93 was my sophomore year. I don't know if all that math works out, but yeah, somehow in 90, oh no, 94, 94 I started because 94 I interned for a jewelry company, which was actually pretty cool. To go in and do all the inventory counts. Ooh, let's count this box of diamonds. Oh, love that. It's fine. We were heavily guarded. There were armed guards walking the building nonstop. But so I did start my career in '94 as internal audit. So inventory counts and helping out with different operational things. And then graduated in '95. So yeah, I'm old. But yes, I wasn't gonna mention years, but yeah, but there's just so much knowledge and wealth of experience there. And it makes it easier for you to do things, and you can do things faster than somebody who's new, but you can also think like 5 steps ahead. So when somebody calls and says, "Hey, I have that quick question. I wanna do this," "Oh, it's, December 30th, and I would just happen to be at the car dealership, and the guy told me if I bought a truck, I can write it off on my business return." And you can think through that with them. Like, okay, you've gotta, figure out the trade-in value of what you're whatever the value is you're trading in. Is there a gain or loss there? And how's, are you going to be able to take the sections 179? Because there's times where you can't. And, so those are the things that you have the experience that maybe somebody who's completely brand new doesn't think through all the consequences of what that
Right.
purchase means, what that transaction means. So no, it's definitely well worth it to be in touch all year, and to set up those meetings. So, but I have loved this conversation and, I've had a great time, which I knew I'd have fun time because I love you. But, but I just hope that anybody who's listening to this podcast, seriously consider investing with your tax preparer into a tax strategy, tax planning, tax strategy. Sometimes people call it slightly different things, but essentially the gist is paying for more than just the tax prep. it's just well worth it. And I know 99.99% of people do not want to talk about taxes. I totally get
Oh,
it,
no.
but it impacts 100% of us. So it's just, it's worth it to be able to sit. And, the gem is when you find somebody like Robin who can talk to you as if you're a friend, but like the educated friend. So they know what they're talking about, but they're not going to sit and quote IRC this and in, IRM and this
The
and,
Internal
rev
Revenue
procs and
Manual.
that's exactly right.
Right.
Rev proc, whatever. I can't listen to that. And I actually understand what those things mean. But to be able to find somebody that can sit and explain things in plain English is just that's invaluable to me. So, but this has been a great conversation. And anybody wants to get in touch with Robin, we're going to put her contact information in the show notes. So be sure to check that out. And, hopefully you've learned something from this conversation. So thank you, Robin, for being here today.
Oh, you're welcome, Kelley. It's always great talking to you.
Thank you. This is going to